just so the others have the information, right? So what are we doing? It says Quality Cut Steak Company uses a perpetual inventory system. The records of Quality Cut Steak Company list the following selected accounts for the quarter ending April 30, 2015. So they give us these accounts.
And then perpetual is when we use like merchandise inventory, not the
Yes, you're right. We don't have all of those other accounts like we do in the periodic system. So we don't have the purchases account. We don't have the freight in account. We don't have the purchase discount account, and we don't have the purchase return and allowances account. So we're just going to have an inventory account. Okay. And they want me to prepare an income statement. Okay. So I got all my data here on the right. I don't think we can. We're going to have to scroll back and forth. And we're going to start with the revenue section. Okay. Let's see how this thing lines up. I guess we have to kind of squeeze it in like this. And I'm going to get my sales revenue. So see sales revenue here, 302,500. Funny how it doesn't. Just squeeze it in like that.
You can make it a little smaller on the right, but
that's about it, yeah. Okay. So we're gonna kinda have to move back and forth, but sales revenue will be the first. Oh, actually it goes smaller once you click on it. Okay. Sales revenue. Am I going blind? It's not necessarily in alphabetical order. Well, net sales revenue is after you subtract the discount and any sales returns and allowances. So let's see. There. Or maybe I need to. I gotta scroll down a little further. Got it? I guess we'll go with. It's really not supposed to be called net sales revenue, but let's see. Interesting. Okay. We'll call it net sales revenue. Huh. Hang on. See, it should be called sales revenue. 302,500. We'll start by doing that. 302,500. And then you would subtract any sales discounts and sales returns and allowances. Okay. Let me, we gotta get our bearings here. Okay. Unless they want us to net it out right away. Okay. So if we're going to say this is net sales revenue, that means we have to subtract the, we have to take the 305 and subtract 7,000 for sales returns and allowances and 1,500 for sales discounts. Usually we show that on the face of the statement, but the way the account titles are, I'm going to go ahead and do that. Okay, so 302,500 minus 7,000 minus 1,500. And that's these two. These are contra Contra revenue
You were
accounts,
subtracting which one? Sales returns?
allowances, and then the sales discounts.
So,
So I get 294,000. Okay, I'm gonna put that there. Now I notice they have interest revenue. So there's an interest revenue figure here. Where is that guy?
At the top.
Yep, 1,000. So we'll put that 1,000 in there, and we'll call that interest revenue. Okay. So now what we have is our total revenue will be the combination of the two. So 295,000. I need to label them, right? So I got my net sales revenue here. Remember, and the reason it's called net sales revenue is it's because it's net of the sales returns and allowances and the sales discounts. So I took the total revenue of 302,500 and I subtracted, get this guy out of the way. I subtracted 7,000 and 1,500. Okay, that's how I got the 294. Okay? So this is going to be called my total revenues. Okay, and this is what we call a single-step income statement.
How'd you get 1,000 for the interest revenue?
I got it right from
okay,
here.
okay.
Yeah,
Later.
right there. Yeah, first line item. Okay, now we have to subtract the expenses. Okay, so we're just going to go down the list and plug in all the expenses. This thing's kind of finicky because it keeps expanding as we go down, but why don't we identify expenses? So revenues, revenue, inventory is an asset, it's not an expense. Payables are liabilities. We took care of the sales figures. Here's the first one, rent expense. Okay.
What do they mean by selling?
It goes into the selling category. So you have general and administrative expenses, and they have subcategories. They have the operating expenses, and then they have the selling expenses. Okay. In this case, it's a single-step income statement, so we're not going to have to categorize them. But I'm suspecting that the second step, the second part to this problem, will make us do what we call a multi-step income statement, where you have all these different categories. You're still going to end up with the same net income. It's just that the way we categorize things will be differently. Okay. So I'm just going to go down the list. Rent expense. Okay. Interest expense. I'm going to identify them. Okay. We got depreciation expense.
and that one's administrative.
That one says administrative. Utilities expense. And we might want to go back up and read that problem a little more carefully. Is it asking for just the selling or the administrative side of things? Or is it asking for everything? Requirements. We didn't even look at the... Okay, it says prepare a single-step income statement. So that's what we're doing now. And then it's going to want us to prepare a multi-step. That'll be the next thing. Okay? And then the third one, we'll deal with it when we get there. So I did utilities.
So why is rent expense selling and then utilities expense we don't use the selling one?
Did I skip the... There's a...
There is a selling
There's
one
two,
for
yeah.
utilities expense.
Oh, I haven't gotten to that yet.
Oh, you add all.
I went down. I'm going down this way, then I'm going to come back down this way. You see what I'm doing?
Yeah.
Yeah. And I don't think it's going to make much of a difference for this problem. So where did I leave off? Utilities, administrative. So now I'm on this column. I got cost of goods sold. I don't think it wants me to order it and in any particular order. Let's see. Rent expense administrative. Utilities selling. And delivery expense. Let's just make sure the labels are right, right? Delivery is selling, utilities is selling, rent is administrative, cost of goods sold. And that's that for that column. Then I got utilities administrative, depreciation administrative, interest expense, and rent expense selling. Looks okay? You guys checked it out for me? Okay. Now we can put the numbers in. So starting with rent expense selling, it's question. Okay, interest expense 18, and I'll tell you why it's called a single step income statement in a minute here. Okay, depreciation expense 1320, 43. What else we got? Slide this over. Cost of goods sold 149,940. Rent 93, 10,3, and 3,000. Now, normally we would order it in the order of largest expense to the smallest. You see what I'm saying? But I'm thinking that this thing's gonna let it go, so I'm not gonna reorder it at this point. But if it doesn't like it, then we might have to reorder it. Okay, so I'm gonna add up the expenses. So starting from 21,7 all the way down through 3,000. Okay. Now that's a subtotal, right? That's a total of the expenses. We put it there and we call that total expenses. Oops. Okay. So now you can see, we'll call this net. Okay. I think we got it. We got it to the point. Now, the reason it's called a single step income statement is that we've done several steps up to this point, but the way it's presented in a single step. And the single step is taking total revenue and subtracting total expenses. That's a single step. Okay. Later on, when we do the multi-step, you're going to see the difference. You're going to see what I mean by multiple steps. Okay. So why don't we get the difference? 295 minus 201.66. Almost 201, right? 660. That gives me 93,340. So we did that single step. We took total revenue and in one step subtracted total expenses. Okay? We'll get this out of the way for now. We did well. Okay? So the point I want to make is if you were going to present this in a formal format, you would have this cost of goods sold figure up here first because it's the biggest, and it would be followed by rent expense, then utilities expense. You'd have it ordered from the largest to the smallest. Okay. This is an introductory class. They're happy to have you actually get it into the right category. So that's what's happening here. Okay. Now we're going to do multi-step. So we're going to take the same data, the same account information, and we're going to do an income statement where there's multiple steps, meaning there's multiple subtractions, if you will. Okay, so watch this. Same data, right? Remember, my net sales revenue figure was a number that I computed using balances in several accounts. Now in the multi-step income statement, I'm going to show that computation right in the income statement. So that's going to be one of the multiple steps going on. So here I'm going to show sales revenue. See, they give it to us this time. So the program's kind of set up where it guides you a little bit. We didn't have this label in the single step, okay? So we're going to put sales revenue in, and I got to get my data up again. So that sales revenue figure was 302,500. See, I'm showing it right in the income statement. Then remember, we're going to subtract the contra revenue account balances. So the contra revenue accounts are the sales discounts and sales returns and allowances. They sit over there next to revenue, but they behave in the opposite manner. So these two accounts actually increase with debits. So let's go sales discounts and sales returns and allowances. Okay, and then we can drop those numbers in. It's saying less here, so I'm not going to show them as negative because the less is telling you to subtract them. So I got sales discounts of 1,500, and I got sales returns and allowances of 7,000. Okay. So what we have to do is we have to subtract them, and we're going to end up with the same net sales figure as we did up top, right? So 302,500 minus 1,500 minus 7,000. So 294 is going to be what we call our net sales revenue. You see how that works? So we're showing it on the face of the income statement. We're showing all of the steps that go into figuring this net income out. And then things are going to be in categories, okay? It's not going to just be total revenue minus total expenses. Okay? Now we're going to subtract what we call cost of goods sold. So cost of goods sold in a multi-step income statement, we want to show it in a separate step. So we're going to take the cost of goods sold figure of, here it is, 149,940. All right, 149,940. Now, maybe I should show that one as negative, because it's not saying less over there. So I will take my 294 in net sales and subtract my cost of goods sold. Okay. So I get a gross profit of 144 and 60, 144,060. See, in a multi-step income statement, that's shown separately, right? So we already did 2 steps, and there's going to be a couple more steps, right? Versus the single step where we just really had 1 step, taking revenue minus expenses. Okay. Why don't we hit check, and if it marks me wrong, it's because I labeled it negative, but technically it should, yeah, because you're subtracting. Now it takes the label off, but you can tell that's a subtraction.
What about the interest profit or revenue?
Yeah, that's going to be in the final step.
Oh.
Yeah, so we're breaking things up into steps now, okay? So this is where that administrative and selling category comes into play. So now you're going to have what they call operating expenses. And under operating expenses, you're going to have 2 categories. You're going to have the selling expenses, right? And they're only giving me the option for selling. So I'm going to do selling expenses first. And we're going to go find all of the selling expenses. Okay, that's why they're labeled that way. So the first one is rent expense. That's selling. Make sure you get the selling one, right? And that's going to be 21,700. Now the next selling expense, I don't think it happens until way over here at the bottom of the second column. See here? So utilities expense. That's 10,300. And then I'm going to have delivery expense, which is selling as well. And that's 3,000. Okay. So we could add those up. 35,000, if I did it right in my head. You might want to double check that. That's going to be my total selling expenses. Okay. You see how I did that? You check my math for me? Yeah, I'll do it myself. You hate to get to the end and then the math was what threw you off, the arithmetic, right? So just, yeah, it looks like it's going to be right. Okay. Now we're going to have administrative expenses. So 2 subcategories, right? Under operating expenses, you have selling expenses and you have administrative expenses. So the first one is going to be depreciation, right? Administrative. Then you got utilities administrative and rent expense over here, administrative. Okay, and then we can populate these fields with their balances. So, oops, make sure your cursor is in there. 1,320, 4,300, and finally 9,300. Okay, so you got 14,920. Okay, that's going to be my total administrative expenses. And then from this point, it's just a matter of doing some math, right? Let's see. Make sure it's right. Okay. So what we have to do is, see, you notice already there's multiple steps going on. That's why it's called a multi-step income statement. Okay. We need to combine our selling expenses and our total administrative expenses to come up with total operating expenses. Okay, so 35,000 in selling expenses plus 14,920 in administrative expenses. So I got 49,920. Okay. Any questions so far? Okay. Now what I do is I take the difference between my gross profit from the prior step and my total operating expenses, and that's going to give me my operating income. Okay, so watch me here. I'm going to take $144,060 and I'm going to subtract my total operating expenses of 49,920. And my operating income is 94,140. I got well done. You guys got well done?
No, I think my math is
Yeah, excellent. That sounds better than well done. Yeah,
I feel like it chooses like how it's doing.
it gives you a boost when you get a good one. It's almost like a video game. Yeah, you're trying to score here, right? Now, there was a question, Spencer, about interest expense. We put that in the category of other revenue and expenses. So both the interest revenue and the interest expense is going to be in this category. Okay? Because it's not really related to your operations. When you think about it, your operating expenses are the expenses that you have incurred to run the business. Interest revenue and interest expense are really expenses that are peripheral to your operations, right? If you think about interest revenue, that's money you're earning on your money that's either sitting in a bank or is in some sort of interest-paying investment. And interest expense would be the amount that you're paying on your borrowings, right? The cost of the money that you borrow, okay? It's not really your operational expenses, okay? So we're going to have our interest revenue, which is the first item up top.
Did you put any negatives on this step before? No, yeah.
No, I didn't. I don't think it's going to be, as long as you do the math correctly, it doesn't look like it's too finicky about whether you have a negative or not for this problem, okay? So that's 1,000. Now in this step, I might put a negative, right? Because you see, it's saying put your expenses in parentheses, which indicate negative. I'm going to do that with my interest expense. So I got 1,800. We'll go like this, 1,800. I'm going to call that interest expense. And then the net effect will be a negative 800, right? Because 1,000 positive and 1,800 negative, that gives you 800 negative. I'll do it that way. Okay. I'm pretty sure it's not gonna take anything off. Now, what we do is we're gonna take our operating income and subtract this $800. This $800 in what they call other revenue and expenses. Okay. And that should give me my net income, 93,340. I'll just check it one more time. Okay. Well done again. Okay, so real quick, let's rewind. Remember, single step, it's just a matter of taking your revenue and subtracting your expenses. There's the single step. Multi-step, you have several stops along the way, right? You got several subtotals. Okay, this is an important one here. Gross profit, right? That's isolating. That's telling you, okay, 294 is what I sold these things for, and 149,940 is what I bought them for. Okay, so that's important. Like even down to the smallest business, like if you're a hot dog operator, you want to know how much the bread and hot dogs and condiments cost, and then you want to compare that to what you sold these things for to see how much you're making on each hot dog, right? That's what that's telling you. Now all the other stuff is support expenses, right? You got selling expenses and you got administrative expenses. So there's other costs to doing this business, but to look at gross profit, right? Compare your revenue and your cost of goods sold. You can really see, you know, you need to have a positive gross profit before you go any further than that. You're not really in business if you're running a negative gross profit. So gross profit's an important figure to remember. Remember how to compute that. Go ahead.
Could you scroll down? I missed the last part.
Oh, okay. Right? So that's the last category. Wanted to see the last part where we put the other revenues and expenses. Actually, the next step is asking me to compute the gross profit percentage. Okay? So when you get gross profit percentage is always your gross profit divided by your revenue figure. So we'll say, I'm going to use net sales revenue. Okay? So gross profit divided by net sales revenue. Okay, so we'll just go to our multi-step income statement and find our gross profit. My gross profit is $144,060. And my net sales revenue figure is $294,000. So if I take I just divide it, right? We're coming up with a percentage, 144,060 divided by 294,000. So that's 0.49. That translates into 49%. So what it's saying is that my gross profit is 49% of my net sales revenue. Can anyone express that with different language? In your own words, what does that mean? That's pretty good, yeah. They make half of the price in profit. Or you could say something, for every dollar they sell, they're making 49 cents, right? They're getting 49 cents after the cost of their product every time they sell a dollar, okay? So it's a good number to know. I know some of you are gonna open your own business. That's something you wanna get real comfortable with talking about. You guys watch Shark Tank? Or any of those?
Yeah.
A lot of times they throw this terminology out when you're listening. Oh, like, what's your gross profit on those handbags? And they drill these people. They're up trying to sell because they're trying to sell their business idea to get funding, right? So they can go bigger. You got to know this terminology when you get in front of those guys, especially the bald guy. What's his name? Yeah, Kevin. He's the guy that tears everybody apart. But he's really knowledgeable, right? He's asking questions about this kind of stuff. Okay. Did Quality Cut achieve its goal? Well, we got to go back up. They must have told us the goal somewhere up here.
That's on the bottom.
It's on the bottom?
Yeah. The 80/50.
I don't even see it.
It's up the.
Oh, right here. Okay. Thanks, Titus. N. Davis, manager of the company, strives to earn a gross profit percentage of at least 50%. Well, they're shy by 1%, so I would say no. No, Quality Cut did not, but in reality, that's very close, so close enough, yeah. I think that's it. So really, the objective of this is threefold: to make sure you know how to do a single step and a multi-step income statement, know the difference, and then get a real good handle on gross profit and gross profit percentage. Okay.